Hello, everybody. I'm your boss, Joe Boss, and welcome to another Daily Plan. Nice to see you all. We got quite a day ahead of us here. We have a whole Palooza of PMI releases here. I got the economic calendar here just to quickly go over them and what my expectations will be, at least on some of these markets, given that we hit some of these consensus forecasts. So let's go through this. Right off the bat, later today, we're going to be getting Chinese and Japanese PMIs. The Japanese PMIs don't seem to be doing so hot, so that could potentially bring some weakness into the yen. It does seem to be a more risk-on week. However, almost every single bit of commentary from the outlooks that I've read are cautious of any more upside on yen pairs, for example, on dollar yen, because now going past on dollar yen 151, every single time we've gone past those prices, we've had the Ministry of Finance, the MOF, intervene in FX markets. And market participants usually hate when that happens because they will just do it. They will just intervene. And then they will announce at the end of the month, disclose whether or not the intervention they may have done like 2 weeks ago, 3 weeks ago, that if that big old fat move was actually the BOJ or not. However, typically when you see those crazy moves with fairly little economic data pulling behind it or just before some major economic release, it's probably the Ministry of Finance coming in and intervening. So with Japan and China tomorrow, you could also see there's India and Russia. The following day, towards the AM hours, London session, we have all these European PMIs coming out. Now, if you recall, a couple of weeks ago, we had the flash PMIs come out, and they surprised to the upside. They actually did quite well. And that brought quite a lot of relief to the Eurozone currencies. So that included the pound and that included the euro. And it was good to see that. It meant, oh, Europe is actually kind of holding its ground economically. There was still concern about the services side of many of these components holding firm, which is not necessarily what you want to see, considering most of the inflation that we're getting is coming from the sticky side of services and the CPIs that we're getting. In fact, a lot of the core or super core versions of inflation that a lot of central banks are highlighting as, hey, even though headline CPI is XYZ and it's coming down, these core and super core measures are fairly sticky. And we can attribute a bit of that towards services. So we'll keep an eye on how the individual sub-indices of these services PMIs print in the euro area. Net expectation is that they're going to end up printing higher. That seems to be the consensus and the forecast here from Trading Economics, which would probably provide more of a boon for the euro in that scenario. However, you do have the risk of the ECB coming up, and if they do say anything particularly dovish, even on a rate pause, I'll go ahead and remind you guys about last week with the RBNZ. I'll go ahead and pull up the chart here. RBNZ is Reserve Bank of New Zealand. I'll bring up Owanda. And this was on a slightly dovish call. As soon as the RBNZ released, they had held their policy flat. But they had said, oh, inflation is moving all right. Inflation's moving in the direction we want. And maybe things continue to improve from here. We might change our policy, but it doesn't seem like we need to do anything now or in the immediate future. So even on a fairly neutral call, you can see the market isn't reacting too well to that sort of release. However, New Zealand is in a much more tenuous economic situation. They have other problems idiosyncratically in their economy that are not being experienced in the Euro area, and also vice versa, right? Europe has problems that New Zealand doesn't have. However, there's other things we have to get to, so I'm not going to delve too deep into this. Moving further down, S&P Global, that's US services and composite PMIs coming out. And then later on in the day, what is that? Is that twice? S&P Global Services. Yeah, Global Services. I wonder why it's... I mean, these numbers are definitely different, but I wonder why they're releasing twice. I wonder what that's all about. Oh, this is for the Great British Pound. So this is actually UK. All right. This is UK. So those are the UK PMIs. These are the US PMIs and Canada's PMIs. And it doesn't seem like Canada's expected to get much of a bump out of their PMIs. Poor Canada. Canada just keeps getting kicked to the ground economically. And speaking of Canada, I do have an extra tab open here because I have a feeling that people who even are watching the Canadian dollar and are expecting more weakness out of the Canadian dollar also need to be aware of this central bank dynamic where if they maybe get a little bit more hawkish and say, hey, we're not seeing things move in the direction we want to see them go, even though headline inflation is moving in the right direction too in Canada. There is this page here out of the Montreal Exchange. Here, just a bit. Short-term implied interest rate probabilities. So when you go and you check out the CME's FOMC rate expectations page, this is essentially Canada's version of that. And you can see they have very low probability of 25 basis point rate cuts. It's only out into almost the middle of 2025 you start to see more significant probabilities come about for a rate cut. All right, with that in mind, Canada still doesn't seem like best bet in the world. It seems like most of the currency move for this particular pair, dollar CAD, is going to be coming from the US dollar side. But that seems to be the primary story for most of the G7 US dollar pair currencies. Yep. And then we'll go ahead and cover these economic events as we get into tomorrow's daily plan. So let's go ahead and look at these charts for the day ahead. Let's start off with the DXY. Then we'll get into US equities, then commodities, and finish it off with some crypto and potentially some individual equities. Because we've had quite a strong move, especially in the commodity space for gold and in crypto. You can clearly see not too much action here on the DXY. We didn't have this up expectation yet, and it doesn't seem like, in my opinion, we're going to be getting this. As I read the outlooks over Friday and Saturday, in Saturday we have the Outlook review meetup where we go over these outlooks as a group. To me, it seemed more likely that as we go through the week, we see dollar bearish drift. So that would be fairly risk on for a lot of these G7 currencies. And I'm setting that expectation primarily because at the end of this week, we have NFP. NFP is expected to come in at 180K. The prior was 200K. So they're expecting a cooling in employment, which would help with wages. Frankly, it would help with the wage inflation. So if that's the case, if NFP does come in at or below the 80K mark, it would likely make the dollar even weaker going into the end of the week. Plus, if these PMIs come through and are relatively strong or going in the right direction for economic recovery in these other countries, it would, I think, lead to some divestment in dollar holdings into, there are some recovery plays to begin getting exposure to in these other countries. So it's making me even more bearish than I was when I set these expectations in last Friday's stream 3 days ago. Or actually now, I think at this point, 3 days ago now. Would have been 2 days ago if I did a stream yesterday. So let's go ahead and look for the week here real quick at some lows real quick. I'm going to adjust my indicator settings here. So this is our distribution of high odds, given some seasonal data here. I'd be very surprised. Yeah, we just tapped into this area here. If I go ahead and slap on the high odds here real quick for the week. Turn off the auto time frame there. Yeah. That could be the high for the week if the PMIs continue to print well. And I have no reason to expect, given the flash PMIs we covered and the reaction we got from those flash PMIs a couple weeks ago, that these PMIs would print well for those countries. Now let's go ahead, do a similar thing for our low odds here, and update the probability pivots using some seasonal data to check out our low odds here. So there's two spots I'm interested in. It's right here, right off the bat. Technically, we've hit that low now. And I'm not so certain, given this economic information and given these expectations, that this actually is going to be the low here. I may need to change my expectations to be more neutral for the week relative to the open if those PMIs underperform. But I'm starting to skew my expectation more to the bearish side here in the middle handle of 103 on DXY. So I'll go ahead and draw a new expectation here. Something along these lines. And if we are down here by the time we get to PMIs, I would start to be concerned about getting another spike post NFP of getting into the lower part of the 103 handle potentially. So I'd be particularly concerned about the dollar's strength going into this week now. Okay, with that done, let's go ahead and continue on. Let's look at the rest of these FX pairs, the G7 US dollar pairs. Go into our equities, go into our commodities, go into some crypto. All right, we got a lot of lines here. So last Thursday, in the month ahead expectation I set, I was like, okay, using the information that we just have available for the month, this would be my expectation. Stronger dollar here, weaker dollar here, stronger dollar here, and then a more nominal close. Given the new information that I've read over this last week, I'm having to change my expectations. And it looks like even on this particular trading day, I said, hey, some move higher over this week looks likely. So I was a bit keyed into that. Don't want to move that drawing, so let's lock it in place. And then yesterday, or last Friday, during the week ahead stream, set a bullish expectation up into here, and then the bearish expectation there, and then a more nominal bounce. But again, given these expectations here, I'm going to go ahead and go like this. Let's go ahead and update this. Wow. A lot of highs up here. A lot of highs up here. You can kind of see I already did some trade planning, setting the expectation for a high up there. Let's go ahead, update our data source here. Yeah, somewhere around here. Given those PMIs print well, it seems like the top sometime around this week could come around somewhere around here. Let's look at those high odds one more time. Again, really, really high up. Real quick, I'm going to check out the weekly time frame. Yeah, you can see. When you go from a daily time frame to a weekly time frame, TradingView will truncate the amount of historical data that you will load. Now, I'm getting a bit technical here, but it's important to understand when you're using an indicator or you're using any type of statistics, especially in TradingView, that you at least understand the background of how the thing is calculated. And this only takes about 30 seconds to describe, which is when you're on intraday timeframes, not all of the chart's data may load. On a daily time frame, you can go back to as far as the chart's history will allow. The very first bar on this chart from Awanda is from May 7th, 2000. If I go to a 12-hour chart and I do the same thing, now the very first bar here, actually it goes a little bit back. That's actually very, very cool. We actually do have all the available historical data on this chart. So real quick, if I go forward, if I just go forward, you end up with the same shape here, but because now you have slightly different data on a 12-hour chart, that can change the amount, that can change the calculation of the indicator you're using. Even from a day, right? See, we have our peak up here, and then 12-hour, we have our peak down here. The daily peak was up here. So just be mindful when you're using indicators and going between time frames. And this doesn't just apply to my stuff. This applies to everybody's stuff. All right. Let's go ahead and timestamp this, 2024-03-04. Let's lock in that expectation. It's probably going to be a bit lower. Essentially, I'm expecting a cross at least above the 109 handle here on Eurodollar going into the middle of this week, going into those PMIs. Next, let's go ahead and do Great British Pound, US dollar, because we're also getting those UK PMIs. And it doesn't look as helpful. Yeah. And the reason why I say it doesn't look as helpful is because when I look at these seasonal probabilities given the last 21 years of data, most of the time, the top for this particular week shows up around here. Real quick, let's do a check on the UK PMI expectations. Let's see here. So that's later today. This is tomorrow. And the previous is still positive in the 50, but the forecast and the consensus view is for it to effectively stay the same. Yeah. Trading Economics does have a forecast for the composite to slightly increase, but that, again, is going to be a services thing. And if it's only services moving those PMIs, it's going to give the BOE expectations of a whole to still stretch out a bit longer here, at least in the short term. So unlike the euro, I don't have as significant expectations of seeing a higher pound. Now, this is pound dollar. So if the dollar does fall consistently across asset classes, we could definitely see euro appreciation from here. All right. A lot of closes up here. And quite a decent amount of highs up here as well. I'm going to turn on this auto time frame. All right. All right, let's go ahead and check out our low odds here. Right around here is still where I'd expect the low. The economic data out of the UK would have to surprise lower, but then again, if NFP improves, I would say the end of the week would also improve for the pound. So instead of setting this more bearish expectation, let's look at our closing odds. And probably see some sort of move higher up here into the end of the week on NFP. Okay, wow. I'm also looking at next week's odds. A lot of closes are fairly bullish next week on the UK. Would be interesting to figure out what's happening next week that would give us this. Okay. Let's move on to, how about Aussie and New Zealand? Yeah, this is what I was afraid of when I made my commentary last Friday, that these up and down arrows could effectively be flipped around. So we're moving lower here. However, those yield spreads the yield spreads are mostly intermediate term. Short term, long term yield spreads are not benefiting the Australian right now all too much. And if we look at the PMI expectations coming up shortly here, so in about 2 hours from now, actually that's Japan. Oh, we actually already got the Australian PMIs. So we actually got those about 30 minutes ago. Let's go ahead and check out the 30-minute chart. Wow. We got a spike up and it just reversed that on the 30-minute. Interesting. That was a pretty darn good sell there. Eesh. Okay, well, the actual number for Australian PMIs finally printed above the 50 level here. So the Australians must be quite happy here to see their PMIs increase. And then New Zealand, anywhere around here? No. New Zealand PMIs, not around the bend. But we do have GDP out of Australia coming tomorrow, and then some AI group stuff. And that's not looking so great on the manufacturing side compared to those previous numbers. Another set of decreasing values. Not so great on those expectations there. So let's go ahead, look at our low odds here. Depending on how GDP prints, if it comes in below consensus, which is 1.4%, I would say a new low is inbound here on the Aussie. And who knows, that might be the low for the month. Yeah, I would not be. Yeah, you got some skew here. That's close to what, 30%? Call it 28.5% of the time this week. Your low is pretty far low here. So there's risks of going down here. But with this particular indicator, see how we have a 0% here? This 0% is what I'd interpret as a probability gap. Now, again, this is using seasonal data, so it's not going to overlap with a more continuous distribution like this all the time, considering this is also not using seasonal data. This is using all the available data on the chart. When I look at the seasonal data and I see this gap, one thing that I like to interpret is a short trade once you start getting a new low in this area here. And the rationale is that over the last 21 years, we've never had a low this week in this zone between these two pivots. So maybe on a particularly bad PMI release, or comes in below expectations, even though it's above 50, or particularly bad GDP print, well, a lower Australian dollar below this S1.5 pivot, call it 64.66, would lead me to believe that the next most likely low for the week would be in the lower 64 handle here. So I have some concerns about going down here, but that would be as we get closer to this sub 64.7 spot on the chart, which is roughly around where, yeah, this is quite enticing because you do have a bump in your distribution of where you find a lot of your lows, given no seasonal data, given all the data that you have available. A lot of your lows show up around here on the week or around here. Well, this might be, yeah, this is really gonna be choppy, considering you have all these ISM data points and you have PMIs coming out on the US side as well. And the US is definitely in recovery. I would at least lean on the bearish expectations of going down here. Let's see here. This is March 5th, March 6th. And then you got some Aussie data there. Would not be too keen. So it'd be a move like this over the next probably 24-ish hours, 36-ish hours. And then I'd say into the rest of the week down here. Again, considering the NFP, depending on how NFP reports, it's quite important for the Fed's policy to see that NFP continue to drift lower. So then wage inflation will actually also drift lower, even if it's with a lag. if NFP does continue to drift lower as expected, I would still expect a pop into the end of the week here. So let's leave this here as is and follow up on it tomorrow. New Zealand dollar. So far, going sideways. Wow, check that out. 11% of the time, the low for a given week is in this spot right here. Kind of nutty. Might have been an interesting day trade on this first 12-hour bar. Let's go ahead, check out our likely lows. Yeah, there's still room for a bit of a lower move here. Not too much on the side of New Zealand economic data here. And just as a quick check, I'm going to make sure, yep, I do have New Zealand in here. So it's not that it's not showing up because I have it turned off. It's just there's no releases. So with that in mind, I would stay on the bit bearish side of things until, again, end of week. So I don't think there's much I need to change in my expectations for New Zealand going into this week. Let's see here. What else? We can also check out dollar yen. Positive expectations still. We actually hit this expectation a lot sooner than I expected. So right off the beginning of the week, we moved down, created a bottom wick there, and we're in about a 13 pip margin of error of where this thing is priced. It's definitely wrong in time, but prices hitting close to your expected low expectation earlier than expected, I think is actually a plus, even though it might cause you to be unprepared or underprepared rather to actually enter in on these trades. But that's why having alerts is going to be quite important in trading. I don't know, I would still stay net yen bearish. So I think we're going to be upsetting the Ministry of Finance a bit. Even though these yield spreads are net in favor of yen strength, short term and longer term, the spreads are still positive. It's only more intermediate term spreads that created the problem. So the view is quite mixed on the yields side of things here for New Zealand dollar. Not New Zealand dollar. That was the last chart we looked at for Aussie yen. That's not what we're looking at either. For dollar yen. My bad. Quite relaxed right now. Got my workout in, got my lunch in. I'm feeling quite relaxed right now. Okay, let's continue on here. Let's look at our high odds. Again, still quite a lot of lows down here, but let's look at our highs. This does concern me now, considering we didn't move very far down. Yeah. This would be a scenario where if I wasn't positioned right now on a long dollar yen play, I'd probably want to potentially position somewhere 10, 20 pips higher on the crack of a new high for the week, expecting this high here around the 151 low part of the 151 handle to get hit as the high for the week. Wow, check out that for next week. A lot. 42% of the time your top next week comes in between these R.5 and R1 pivots. I wonder where those things are going to line up as we get towards the end of this week. And this expectation here of down into the end of the week might be an incorrect expectation, given, again, if NFP follows the net consensus view. And that would make, well, actually, no, that would make dollar weaker there. Yeah. So that would be down on this chart. Kind of flipped the pair in my head there. Okay. Let's see here. Did I miss anything else here? Major pairs here? No? All right. Let's go ahead and hop over into the equities. So let's do ES. ES also hit the likely high spot. I mean, it didn't exactly hit the spot. It's about, call it 35 points off. I don't know if I would say that's even within a margin of error, because the amount of time you would have to take this trade, and it's, yeah, I'd say I would have called this a miss. Just qualitatively, I would interpret this as a miss. But it seems like it's going to be pulling back here a bit. I don't know how far this pullback is going to end up. Yeah. Let's go ahead and set a new expectation here for the low to reach this area here. Around the 5,100 mark sometime this week for the low. Oh, flip those around. 0304. It's the 4th of March. And I'm still all right with this expectation up into NFP. Check out NQ. Also very similar, although a much bigger miss on that expectation of up first. Yeah, NQ is going to be a bit more tricky, considering NQ now has some relationship with Bitcoin performance at this point, because there are companies in the NQ that hold substantial Bitcoin. So while it's not going to be a perfect relationship between NQ and Bitcoin, there are companies in the NQ that have exposure to Bitcoin. And it'd be interesting to see if those companies on a more sustained parabolic Bitcoin move end up driving a portion of the NASDAQ move. So I would be careful setting lower expectations myself on the NQ, unless I also respectively thought that the risk of getting more parabolic moves out of Bitcoin was lower. So I'm going to leave my expectations as is. And when I have a bit more information, I'll go ahead and update them later. Let's go ahead and check out gold now. Let's get into our commodities. And for context about this blue spot here on gold, I'm going to go to a monthly chart. Go ahead and set up the auto time frame and look at the high odds. Yeah. On this day yesterday, this move up, as we cross this R1 here too, I was actually particularly concerned about more upside exactly like this, because 20.59% of the time, the top for the week comes in around here over the last 34 years. Past 3130, or 2130, my bad, past 2130, it starts to become anomalous. You end up with getting your high for the month in a, it becomes a guessing game to pick out where the high comes in for the month using seasonal data. Let's go ahead and look at the monthly ranges here, and it's like, yeah, it's not too hot there. There is something there. There is a tiny blip in the distribution here, but considering this data, we overlap them. Oh, wrong one. I don't know. I wouldn't bet my life on shorting that. It seems like you either got long and you're enjoying the ride and maybe taking some off, or you also see a risk of going past 2130. Yeah, it's just quite, it is quite risky when gold moves this high. There is still room to move a tad higher, and you can see some blips up here, some blips up here of going higher. All we have to do is figure out, is it reasonable? Is it likely to experience these types of sharp moves this week? And if that is the case, hold on for dear life, hodl. And in the other case, it's a matter of being pragmatic in, okay, this is the likely high. Do I take some chips off the table here, or am I hodling on the expectation of further continued momentum like this? Essentially, this becomes a momentum decision. Do you think the momentum is going to end up continuing into the mid to high 2100s handle? Or is now the safe time to cover against potential fading of more upside on gold going forward? And I'm pretty sure we'll end up saying something similar with crypto. However, the economics in crypto are significantly different than gold. So let's go ahead with this. Yeah, it's not much on the expectation side other than we expected last Thursday in the month ahead outlook to move higher. And yeah, we are moving higher, but we are exceeding these expectations very, very clearly. So we'll follow up on gold tomorrow. Let's go ahead and check out oil, which is CL futures. Ooh, big miss on the bullish expectations here. The oil commodity is not following the gold commodity here. However, it does seem like we've hit a likely low on the week. Maybe this momentum gives us a low sometime here over the next few days. And again, this is the risk that I pointed out last week, where some of these expectations that I set could be flipped around, where instead of up then down, it's down then up. And I hope the people who listen to me clearly listened on that front. So let's look at our low odds here and here. Yeah, there is room for some drift further lower. Is this more or less going to be a matter of, is this going to be a change in trend over the last 5 or some odd weeks where we see a more significant pullback? Personally, I don't think so. I think we're still going to see positive drift going into the end of this week here. Let me go ahead and bring up my closing odds then. And let's look at our closing odds real quick. Yeah. And you can clearly see the risk of drifting lower and getting the snap and end up closing down here. It'd be a particularly bearish week on oil. And if I recall, somewhere here on the calendar, I believe it's tomorrow, if I'm not mistaken. Let's see, I'm pretty sure it's a US report. No, it's got to be the day after then. There we go. Wednesday, EIA releases. And crude oil stocks changed is going to be the big one. Previous was 4.2 million. And expected consensus is 2.6 million. And if I recall correctly, that should lead us to a more nominal bullish close. However, if these inventories come in above consensus, that could stunt these positive expectations I have. So I'd say on worse crude oil stocks, even essentially higher crude oil stocks. The inventory is growing. Probably would put you down here, closing sub 78. You want to see these stocks continue to deplete, so that then oil producers have a bit more negotiating power on the price side as inventories decline. Okay, now we head over to Bitcoin, and then we'll do Ethereum. Bitcoin is chugging along here, still doing great. Currently, I mean, what did we hit? Oh, wow, we were about $80 away from hitting 68. Now everyone's just kind of counting the levels at this point every $1,000. And again, it's hard to argue getting long exposure to Bitcoin at this point, or even at this point after these parabolic moves, because it's chasing. It's a lot of chasing. I mean, I certainly wasn't expecting these sort of moves, but guess what? After all the hype around ETFs for, I don't know, like the last year, and them finally getting approved, it seems to be changing sentiment around investors just chugging capital into crypto markets. So I absolutely don't think this is going to be the high here. I think this is an all-time high, if I'm not mistaken. Oh, it's an all-time, it's going to be close to an all-time high. Oh, man. Crazy history. I'm not looking at this on a log chart here. But this, we're probably going to see a new all-time high this week, if I'm not mistaken. We'll very likely see a new all-time high on this week. I don't know how high it's going to go. It could just go parabolic again and move another $10,000 from here. Setting price expectations on Bitcoin with the information that I have available is just not a smart idea. You want to have more information than just what I have here. There's a bit more research that goes into crypto forecasts, especially Bitcoin forecasts, than just this. But we can give our commentary on it. So let's do ETH dollar. Check out the all-time history index, and it's just been a straight line up and to the right. Ethereum recovering quite well. Still underperforming Bitcoin, it seems. But net, this is a close to 60% increase. Bitcoin 4,000 in sight. It's got a ways to go before it reaches a new all-time high. So yeah, crypto's probably gonna, I don't know if it's gonna hit another parabolic move here until post-halving. That is really stupendous. But the move here undeniably is fantastic. I mean, Bitcoin at new all-time highs and altcoins recovering has been one. Staying just long and holding crypto has been one of the better investments for younger generations, for sure. And historically, as far as performance goes, has been the best performing asset for, I don't know, since its existence. But that's just the way crypto is created economically, how it's structured. I won't get into that now because that would be another separate 30-minute rant. But I think I've covered everything I wanted to cover and gone over some of the risks in the next couple of days here against the dollar on some of these equities. We got a glimpse into these crazy crypto moves and the crazy Gold moves. Oil's kind of surprised me that hasn't done any better. But who knows? Maybe once those inventory stocks come out, if they come out lower, we may see oil producing some fine returns going into the end of the week. We'll see. All right, with that all said, I'll go ahead and say thank you all for watching. I'll be here tomorrow, same time, 2 p.m. Pacific, 5 p.m. Eastern. If you want to reach out to me or get access to some of these tools, you can go ahead and join the Discord. Links to that in the WAP store in the description. And I'll see you guys in a bit.